Hey everybody. Let's see if once I get live up here, I can start this video right here real quick. The only problem with this is when I'm showing you guys this, I can't really see all the comments in the live chat, so I'll have to bring it up on my phone. But basically what I want to do for you guys is show a, hold on a sec, is show you guys how much I made in August of 2019. And so whether that is specifically dividend income or also YouTube income as well. I know August isn't over yet, and there's actually a company yet to pay me, and there's also some interest that I haven't gotten yet. Generally, I get the interest from like having cash in the accounts at the very last part of the month, so that's not in there either. But what I wanted to really show you guys, is this still showing up as like crazy zones within zones within zones? Let me double check. Interest. No, it's showing up right. So up on the screen here, you can see the typical thing that I show. On the left, upper left-hand corner, you can see the consumer or the different sectors, and what I have it by is value percentage of the portfolio, and also the percentage income by each sector as well. So on this table specifically, you can kind of go through what sector it is and then how much it's actually in the portfolio and the income here as well. If you're interested in this, there's also a link in some of my other videos to purchase this so you can organize your portfolio like this as well. But basically what I have here is in a specific table format, and then if you scroll over to the right here, it's kind of in a pie chart format. So for you guys that haven't been on the channel much at all, welcome. The portfolio at the moment in terms of income and sector weight percentage on the left, income percentage on the right, is generally skewed very heavily to three of the several sectors. Energy, financials, and real estate are mostly where I'm heavily weighted, and then it's generally followed pretty admirably by consumer staples, information technology in terms of sector weight percentage. Information technology in terms of actual income is very small in the portfolio, so not too much associated with that. But so yeah, this is how the portfolio looks at the moment, with about 31% of the total income coming from energy stocks, which I've brought down from I think a high of about 38 to 40, I believe about a year ago. And financials will make a pretty big amount of comeback as well. But going back to the actual table itself, these numbers aren't necessarily too important throughout this entire table. What is highly important, though, is what I'm bolding at the moment, and that is the 10,227. So that is anticipated forward income coming from all my dividend paying stocks over the next 12 months. So next month, might be strange because it's not, looking January to December, but just looking at it in terms of this, it's probably going to be around that, just based off the fact of what companies have announced that they're paying today. So this could always change if the company decides to cut the dividend or what have you. And that's coming from around $215,000 or so. So the total portfolio at the moment is around $330,000, of which about 116 is in my 401k. And I generally don't talk too much about the 401k because I can't really split out dividends and what have you there. So generally focus on the portion outside of the 401k where I can split out dividends and tell you guys what exactly is coming from where. And that's what you're kind of seeing here. Current yield on the portfolio is a little high at the moment. I kind of want to bring that down to the about 4% range, but it's at 4.75% at the moment. Yield on cost is about 5.7. I think a lot of this has to do with the fact that some of the partnerships that I've invested in. So that being said, like BP Midstream Partners, Icon Enterprises, other stuff like that, that are technically MLPs. So while they might pay a higher dividend, I'm also going to be paying slightly more in taxes associated with that, and that's maybe another video I can do in the future. But at the moment, let's just take a quick minute and seeing what anybody's saying. Rico Suave is saying $10,000. Yeah, man, hit $10,000 in income. So at the moment, I'm only about $1,800 away from my 2020 goal. So the 2020 goal, if you guys don't remember, is to get $1,000 a month in income. And if you just take this 10,227 divided by 12, currently at about 850. So if you monetize that monthly, I guess is the right word, instead of annualize. But if you monthlize that number, it's $852, so about $148 a month away from my goal. Now, of course, if you include YouTube income, I'll probably meet that $1,000 a month in 2020 for sure. But the goal is dividend income specifically, because YouTube income, can disappear if I stop posting videos. So how this looks in terms of by year income at the moment, with generally speaking around a 20 to 30% growth rate. So this is 2019 at the moment. My goal was 8,500. I believe I'll be getting past that. But this yellow here is the YouTube income, and this line gets you around 10,000. And then next year, my goal is this 12,000 I was telling you about in 2020. So we're just above the 10,000. That's this green bar for dividend income. And then the YouTube income, I'm assuming at the moment just how much I've made so far this year. So at the moment, made about 1,200 or so, or forecasting to make around 1,200 from YouTube. So at the moment, I'm just keeping that at the same. So with dividends and YouTube income, I'm about $12,000, but I want this green bar to get above $12,000 by itself. And depending on how well I do over the next couple months, I might up that goal before I get into 2020. But I believe it's a pretty big goal at the moment. So generally speaking, at about 4%, I need around $25,000 to make another $1,000 in income a year, which ends up being about $83 of income a month. So that being said, $83 a month, I'm looking at about $148. So, I'll probably need roughly around $40,000 invested between now and the end of 2020 to be able to meet that $12,000 a month goal. Hopefully I didn't mistake any of that when I was speaking, but I probably might have switched out a month or what have you for a year or what have you. I might have misspoke, so I apologize there. But actually looking what the company's paid me in August, so I guess you guys have been watching a little bit already, so let's just go down to the number itself. So $765 in terms of dividend income itself. Now, I mentioned that some of the companies, or one company in particular, 3M, hasn't paid me yet, but it should be sometime this week because obviously the month is running out. And then obviously at the end of the month, companies the cash from interest in my accounts, my money market accounts, pay me, which is generally pretty minor. So I'm not really too concerned about that. But at the moment, this is what I've been paid for the month of August. So everything that's highlighted in yellow is payments that I've had. I'm going to ignore this here on the left. It's not really important, and I haven't checked it in a while. But AbbVie, $107, coming from over 100 shares or so. BPMP paid me $161. CQP, or Cheniere Energy Partners, paid me $75, almost $76. Kinder Morgan paid me almost $30, which is awesome. And I think for some of these energy stocks, I stopped reinvesting them. So you'll see that the next time, like in November, it's flat at the moment. Over time, you'll see like AbbVie increased by almost $2 just because I reinvested those dividends. So just keep that in mind. That's also something I did, and I might make another video about. There was a cool day I did, I think it was like the 15th or something. Sorry to diverge here, but I was like, just from these reinvested dividends or something, I was like, I'm going to make another $19 a year or something like that. And it was just like one day's worth of dividends from or from like 3 different companies. So I was like, that's pretty cool. I mean, that's passive income at work there, but or dividend income rather. Anyway, so Kinder Morgan paid me. Main Street Capital paid me about almost $28 or so. And the reason why this is strange at the moment, so it says 27, then immediately jumps up to 30, 34 almost, is because Main Street Capital pays those 2 special dividends at the moment. So they're winding those down to make them more consistent monthly paying dividends. So at the moment, I kind of have those 2 special dividends, so the 14 payments across 12 months. So it looks a little strange. So in June and December of every month, you get a bigger dividend. So instead of being 33, it'll probably be like closer to 40, and then these months will be closer to 27 or what have you. So it ends up averaging out to about $34 a month. It's just that special dividend gets paid twice a year, not every month. 3M hasn't paid me yet, but it should be good for around $45. Realty Income Corporation, good for $4.50, almost up to $5 or so. Cedral Partners, horrible investment, but it is what it is. Paid me 60 cents, 1 cent per share, real big, good enough for like a third of a share reinvested. I don't even think I reinvested it. Stag Industrial, good enough for $14. This is a really good story. I think I should post a video about this because I believe, and I did reinvest these dividends here. You can see $14.68 up to $14.74. But I believe when I first started investing in this, I was getting like $11 a month. So the fact that it's increased probably closer to 30 to 40% is relatively awesome. Really good success story there. AT&T, good for $110 for the month. Verizon, good for $64 for the month. Reinvested both of those dividends. And just those reinvested alone was, another $3 or so a year in terms of dividend income. So that's just looking forward to the next quarter. So multiply by 4, almost $10, $12 in terms of increased income just from reinvesting these 2 shares. So, or these 2 dividend payments. So nothing in the YouTube Moolah account, very little in the Roth IRA account, just Main Street Capital again, 150 shares associated with that. And then some more Verizon as well, good for $20 or so. Minor holdings in Computer Shares account for $1.17 for Realty Income Corp. Clorox up to $5.16. That was another one of my best investments, but unfortunately didn't invest a lot. Otherwise, this would probably be a little bit bigger, but total return on it is pretty good. Shareholder Services, which is owned by Equity, something like that. Used to be Wells Fargo. Now up to $5.30, reinvesting those. And then General Mills as well, reinvesting these. This increases by about a penny every time, so good enough for me. Got my first payment from Cardone Capital as well, good for about $56.25. There's that. Ooh, we got some questions. Cool enough. I'll finish this and then I'll start asking or answering some of them. And then Amex Savings, $2.86 because I took out some of the capital and put it in for investing, and it's going back up next month because I have about $800 or $8,000 that I moved into there from selling my car because I won't be using it for a year. So that at the moment will be a net positive, and then I'll probably go net negative next year when I end up buying a car if I move back to Houston. If I don't and I end up going to a different country, then maybe I'll be able to ride the gravy train a little bit longer and not have to pay for a car. But we will see when the time comes. So that is good for $776 for the month of August. Now, if you actually look at YouTube income, August isn't really over yet either in terms of YouTube income, but over the past 28 days or so, I average about $150 to $155 over the past 28 days, and that's been pretty consistent over the last 2 weeks. So at the moment, I'm just going to assume $150 because that throws me over $900 for the month, which is a little bit down from last month in July, but I haven't been making as many videos. I've been doing more live streams to more communicate with you guys. And so while that means I might make a little bit less money, it means I'm able to interact with you guys and talk to you guys a little bit more at each video. So means less for me, but in the long term, I think it's better for me, the channel, and for the community as well. So at that point, I think I'm just going to leave you guys, not leave you guys per se, but leave the actual video portion there. And maybe what I'll do is I'll just add these two together to say exactly. So $915 of income for the month, which is pretty good. Plus, I guess I have Shopify Income, but month of August isn't really open or over yet. Shopify Income is like $20 or so at the moment. A lot more goes to fees than I anticipated, but that's from selling the spreadsheet that I made for you guys, which you guys are somewhat seeing at the moment. It's just slightly trimmed down so that you guys don't get confused with all my portfolios and what have you. You guys probably have a lot simpler portfolios, and good for you, because for some reason I decided to make mine very complex, and I should probably make it a little bit simpler on me. But there's that, and I think what I'll do now is switch over to questions and see what I can do for you guys at the moment. So thanks for everybody that's on at the moment. And I guess before I get started, make sure to find me on Facebook at Matt Money. I'll probably leave a link down in the description below. And if you like the spreadsheet that you just saw, also look down below. I believe what I'll do is I'll post a link to my Shopify account where I sell it for $1. That way you can make really pretty graphs like I showed you guys here, like this graph for your portfolio, so you can see where your sector weight percentage is and your sector value is. And I'm doing it, only selling it for $1, not because I'm trying to make money, but more so I can pay for the Shopify fees to host it. So like I said, I probably have sold the most that I'm going to sell at the moment. It's only sold about 25. So at the moment, at 25, I'm not even making money because the Shopify fees are about 25 or so percent at the dollar. And then obviously I have to pay to host on Shopify for about $30 a month. So it's not really for me, it's more for you guys and being able to distribute the spreadsheet. And maybe as I grow, the income from that grows, but it's more for doing it for you guys and growing the channel as a whole. But anyway, really useful material. And then I guess there's also a video associated with it. And I should probably put that in the description on the Shopify link, but of how you can use it and what have you. And there's a little instruction on the first tab as well. So I said Facebook, shouted out the spreadsheet. Thank you for the 25 of you that have purchased it. And then, if you ever want to DM me or anything like that, or what I've been trying to do is, now that I'm doing a lot more live streams, and I kind of like doing this a lot more, so I can communicate with you guys more instantaneously than rather through comments. I'm looking for people to either interview me, or I'd rather interview people and ask them what they're doing and how their portfolio is set up and learn from them. So I've asked a couple people. People have either been busy or just got done making a video, so they were tired or done for the day. But if you're interested, make sure that you find me at Knowvis, Knowvis, on Instagram, and direct message me. And we can set something up, whether it's a Google Hangout or a Discord or something like that. Any way to get more people to get the mindset going that we're looking for in this sort of community. So at that point, I will stop the actual video and go to comments and stuff like that. And glad you guys are online. So got the typical people in here: investing with AA Ron, Joel Boston, Mike's Personal Finance, Gen X Dividend Investor, and investing with Jason. I believe I've seen you a couple times before. But no real questions really yet, other than people shouting out how much they're making. So Joel Boston's about $5,000 a year. That's awesome. People talking about 3M. Abby goes, yeah. Is 3M in September? Let's check it. I got some other stuff up on Google Chrome, so I'll open Mozilla Firefox. It's been a little bit, but let me know if you guys like the format of this video. If you don't, let me know. I won't be hurt, because obviously I'm doing this for you guys, not for me. While I like this format, it allows me to communicate with you guys a little bit more directly. But if you don't like it, I've noticed the viewership has somewhat gone down because of these videos. I don't know if it's just because it doesn't show up well in algorithms, or I don't get good tags or what have you. And it's fine, if, in my opinion, if the viewership goes down. I just want to know from you guys if it's something you prefer, or you prefer the other videos. But let's see, 3M dividend. Let's see if it's in September, like our boy suggested. And if it is, I screwed up. But I thought it was this month. Man, this internet today, I'm not having it. Ooh, down to $1.50. My cost basis at 160. Oh, somebody just bought the spreadsheet. Thank you for whoever just bought the spreadsheet. That's awesome. Oh, you're right. Cool. Okay, I'll have to change that. All right, so I only really made like 850 this month. So thank you, whoever just mentioned that to me. Gen X dividend investor. Thank you. Remind folks to thumbs up more. Yeah, please thumbs up, and if you don't subscribe at the moment, please subscribe. Love talking to you guys. You can ask anybody in the room in the live chat. If I get back to their comments, I try my best to. I get really upset when I find out that I haven't answered somebody's question. What else do we got? Let me go to this guy. You can see the inner workings of what this is. We can go to an actual webcam now and kind of get talking about that, unless somebody asks a question. Oh, one of the things that I thought was really cool for the format was, it wasn't my format per se, it was PPC Ian's format. So that most recent video I thought was super cool, where he kind of had like the ticker symbol at the very bottom. So if I can somehow figure out a way to do that, that would be really awesome. But in the meantime, let me throw up a couple links into the live chat for you guys while I wait a little bit of questions. But I guess we can put it back on the screen so you guys can kind of see what I'm doing. But maybe not. Maybe you're seeing too much. You're seeing all my other spreadsheets, all the inner workings of Map Money. Excuse me. So I'll put in the Facebook group for you guys. Whoa! Facebook group for you guys. Whoops. Well, that didn't work. I don't even know what that is. Let's try that again. What is that? I'd say it's like a credit card thing, but credit cards generally don't have like letters in them either, so you guys can try to figure out what the hell just showed up and maybe steal it. I don't know. And here's the actual YouTube video itself, if you're interested on how it works. Sorry, I'm kind of going lazy. So getting back to what broker I use, some questions. I currently use Fidelity for most of my investing, but I also use Computer Shares, and I also use Share Owner Services by Equity or Equiny. But the reason why I use Fidelity is, one, I really like the user interface, but it also was set up for me through my employer, so that's where my 401k is. And hey, good evening, everyone. So the day for a lot of you has come. It is finally the day where I actually release the dividend growth tracker portfolio thing workbook that I've been. Ignore me. I have no idea what I'm doing. So what was I saying? Yeah, use Fidelity because my employer uses it, and then I basically just started using it because of that. So I opened an individual brokerage account, and I also opened it because of my IRA as well. So that's really that. Do I put in additional money every month for investing, or do I only reinvest the dividends? So I do both. I will do this again. Somebody keeps asking me, how much I add every month, and if that includes 401k, and trying to split it every month. So I'll say the dollar amount, but what I want to say for you guys is that it really isn't necessarily important as to what the dollar amount is. What's more important is the actual percentage of your portfolio. Sorry, there was like a shadow on the screen. I thought the apartment upstairs was leaking water, and it's just a shadow. So apologies for me looking off camera. So what I think is most important is the percentages of your portfolio. So for me, what I save is around 40 or so, maybe a little bit more of what I make in terms of personal income. And so I think that is more important than, say, the dollar amount. Because if you're looking to invest, percentages is more what you're concerned about, not necessarily the dollar amount, because my dollar amount is for my goals, and everything that you do should be based off of percentages of what your expenses are or your income is. So if you're only making $100,000 and you're trying to retire in, say, like 20 years, then you need to be concerned about saving 20% of your income and not worrying about what 20% or 30 or 40% of my income is. But anyway, getting actually into the numbers itself. So the real easy number is I invest $6,000 a year into my Roth IRA. So on a monthly basis, that's $500 a month. I always throw $1,500 a month into my individual brokerage account, and then I also put about $1,500 a month into my 401k. It might be a little bit more, it might be a little bit less. So 1,500, that's 3,000 plus the other 500, so that's at least 3,500 a month. And then what I also do is twice a month I put away $500 into my personal savings for nest eggs. So most of the time what ends up happening is once that nest egg gets big enough where I have enough of a cushion for a couple months worth of expenses, and like I said, my expenses are way less than a monthly salary amount. So my actual expenses could be like a couple months worth of salary rather than 6 months of actual income, if that makes sense. So it might be actually like only 2 months worth of salary because my expenses are way lower, and the most of my expenses actually goes out in taxes, if that makes sense. So which comes directly out of my paycheck. But saying that as well, so that's another $1,500 per paycheck that goes into personal savings. And so if that ends up being full, I will push that into my individual brokerage account. So most of the time, at a minimum, $3,500 a month, just based off of what is automatic, whether it's coming from my Wells Fargo checking or whether it's coming from directly from my paycheck going into my Amex personal savings or what have you. Most of the time, that is all automatic, and I never have to automatically send it. So my 401k contributions come directly out. I don't have to do anything with that. My individual brokerage account is set up when I get paid in the middle of the month. That automatically comes out. So that's $1,500 that I never have to directly say move. It automatically moves itself. The IRA is really the only one that I manually have to do. And that's because I have to wait until the beginning of the year when it resets the cycle, if that makes sense. So hopefully that helps. It's a minimum of $3,500. I'd say it's probably closer to $4,000 a month. So that's a decent amount of what have you. So portfolio yield at the moment today, maybe I didn't exactly get all my ticker symbols updated, but it's around 4.8, 4.7%. Yield on cost is around 5.8, I think is what it showed up as. So hopefully that helps a little bit. What do I think about Kraft as a possible purchase now that the stock has fallen so much? No comment. I really haven't done much research on it, so I don't want to comment positively or negatively. So hopefully that helps. Financial investor, what's going on, man? You got any questions? Let me know. And you're one of the people that I want to live stream Google Hangout with and live stream it. I'll do it right now if you want. But if anyone wants to do that right now, I'm more than happy. Throw it on your or find me on Instagram at Novus, KNOWVIS, and DM me your email address, and I'll set up a Google Hangout right now. We can have a good conversation. I'll share the link so you can share it on your channel. But anyway, had a bunch of people just join, so hello, welcome. Basically, if you want to, it's probably showing me just talking at the moment. But what I just went through is basically my income for August. So I ended up with about $850 because somebody told me that 3M pays in September, and that's the only one that hasn't paid me. So I'll actually change that right now. But that was the only one I was waiting on, and instead of like waiting a couple days and me just kind of sitting here trying to think up of another video, I figured I would just get that done. So Lord Slade asked me, what is my enough number? I'm a young dude, and do I have an exit plan? So I guess I'll ask the second clarifying question because there's a little bit of a delay. In terms of an exit plan, do you mean like if there's a recession, or do you mean like once I have my number, what I'm going to do and how I'm going to exit? But my enough number at the moment, hey Hidden Unknown, how you doing? But my enough number at the moment, so there's kind of a medium-term plan, a long-term plan, and my dream plan. And at the moment, my medium-term plan, which I think I've explained over the past couple videos pretty often, so if you want more detail and what have you, or some other opinions around it, feel free to look back at those videos. But my current number is around $48,000 a year, but that's just medium term. So that's not like me exiting or stopping investing or anything like that. But it's $48,000. I hope to get there in about 5, 6, 7 years, depending on how things go. And the reason why is because my expenses at the moment are around $4,000 a month. So while that, still have to pay taxes and everything on that $48,000, that's the stepping off point. That's the medium term point. And I think why I say it's medium term point is because once I get to that point, I feel like, depending on how long that takes me, I can reevaluate my long-term and my dream goals. If I want to change those, if I want to increase them, decrease them, if I want to change my strategy. Of course, I'll be thinking about this, a couple times every day. But documenting those, I believe, is very important so that I can hold myself accountable. My long-term plan, it really all depends. There's like a long-term plan, there's like a long-term plan, and then there's like a dream goal. Dream goal is pretty absurd, but anyway, but going back to the second part of your question, once I reach my goal is when so Lord Slade, to clarify, he's asking about what my exit plan is once I reach my goal. So I personally, I was having this conversation today, I really like what I do on a day-to-day basis for a career. So I would want to continue to do that, at least for the foreseeable future, at least for my midterm goal. So once I become technically like financially free and I don't necessarily need to rely on a paycheck, I'm going to continue to work because in my opinion, I like what I do. And where's my kolache spot? Well, I don't live in Houston anymore, so unfortunately no kolache spot anymore. If they have kolaches in Trinidad, some of my Caribbean followers might be able to answer that one, and I'll be more than happy to check it out. But going back to the actual question, so between my medium-term goal and my long-term goal, I probably will continue to work for who I work for as long as they're willing to employ me. So anyway, hopefully that answers it. I will definitely, if I actually do hit my long-term goal or my medium long-term goal, which is about double my medium-term goal, so about $100,000 a year in passive income or dividend income, that's probably when I would start trying to think about something different. But just for my medium-term goal, I'm going to continue to be where I'm at, I believe, in the current time frame. So I'd like to know something, but I'm not sure how to put it in words, as I'm totally new to retirement accounts, which I've started since the last 3 years. No problem, Mohammed. We'll work through it. So you have an IRA account that is by your employer, and now you're thinking about opening an individual brokerage account and invest in it. Is there a good time to buy stock? So, Mohammed, I don't want to direct you in the wrong path. I think first and foremost, you probably should sit with a financial advisor. But my guidance would be, and I'm not going to tell you to buy stock, when to buy stock, but I think the first thing you should do is, if you're looking to invest, is really sit back and evaluate what you personally want to do with your investments, when you need your investment money by, how active do you want to be involved in your investments, and what was the other thing? What's your risk tolerance? And once you kind of have an idea as to that, you can formulate what kind of investing strategy works for you. And what I mean by that is, if you want to be very passive, so you don't want to be dealing with it every day, you don't want to have a lot of volatility in your portfolio, you need the money in about 30 years, not in the next 5 or anything like that, then, and you're very low risk tolerance, then passive income is, or dividend income and dividend investing is probably for you. But if you want something like, you need to double your money, you want to use it to buy a house, you need it in 2 years, and you don't care if it all goes away or you hit that number, then day trading might be something for you. It's just not my personal style. So I think if you're able to answer those 4 questions, that's more important than when to buy stock. In my opinion, I'm making money every month. I'm going to be investing regardless of the market's up, down, going sideways, because I'm investing for dividends. I'm not investing for when the actual value of the stock goes up or down. The fact that the portfolio is 330,000 isn't important to me. The number that's important to me is the 10,200 that I'm anticipating on getting next year. If there's a recession, maybe it goes down to 9,000, what have you. But in the long term, the amount of shares that I own is what's important, and are they going to continue to keep paying me dividends? So hopefully that helps. And I know it's not an exact answer to your question. It's kind of a roundabout, but hopefully it makes you switch your mind and think a little bit differently about it. So the 5+% yield on cost is the amount you receive over the course of the year, or do you receive the 4.8? So it depends on how you look at it. So the 4.8 is what I receive if you were to look at what the value of the stock price today. The 5+% or the 5.7, 5.8%, whatever it is the yield on what I invested at over the course of the past 6 years. So if you're thinking about what I invested at, let's say I invested $100 and now I'm getting $5 in income, and that means at the moment the share price probably went up by like $10 or something like that. So what I'm actually getting of that $5, and anyway, that's probably a bad way to explain it, but it's basically just thinking about what the 4.8% is looking at it on what the value of the stock is today. So that number changes all the time. And same with the yield on cost. That changes all the time. But what doesn't change is the price at which I bought the stock. So the fact that the yield on cost is higher means that the value of the stocks that I purchased have gone up. Now, if the yield on cost is actually below my current dividend yield, then that means that the value of the positions that I have actually decreased, which isn't necessarily a bad thing either, because that means, I guess it really all depends on if I'm continuing to invest, but I would actually welcome it if my yield on cost was higher, right? I don't know. I'm probably confused myself at this point, so I apologize. Did buying heavy help? Heavy? What do you think? I think it's relatively okay, but I'm not a financial advisor, so. Gen X, my absurd goal is absurd. I'll tell you my long-term goal. So my long-term goal is about $1 million a year in dividend income. So I mentioned the $48,000 goal. That's $4,000 a month. That's just to basically meet my expenses at the moment. My more safety goal, where I would actually think about, I guess, quitting my job and doing something else. I really like what I'm doing at the moment, so I'm not advocating that I don't. Would be about $100,000 a year, so almost double my medium-term goal. And then $1 million a year, so about $83,000 in passive income a year would be about where my long-term goal would be. my absurd goal is I'm not willing to disclose that at the moment. Matt, my guy, how far you think from the 48,000? Well, at the moment I'm at about $10,000 a year, so I can bring this up and share it with you guys. So that way it explains a little bit better. But at the moment I'm here. I'm hoping to increase this by about 30,000 a year. 30%. Sorry, 30% per year. So I get to the 50,000. So hopefully in the next 6-7 years, we'll see. And I'll continue to adjust this as time goes on. But I've been able to. It's going to get more difficult, and I'm going to have to either increase my income or what have you. But I mean, next year it's an increase from 12,000 to 15,600. That's $3,600. And if you take 4% of 3,600, I mean, it's a pretty absurd number. I think it's like $120,000. So to get that, I'm going to have to invest quite a bit of money. So if you think about it, if I want to increase my dividend income by 20 to 30%, I'm going to have to increase the portfolio size by 20 to 30% annualized. So I'm going to have to come up with some creative ways to either make money, or this snowball effect is going to have to take charge. And of course, dividend growth rates of 6 to 8% will definitely help as well. But it gets a little bit crazy. So hopefully that's a little bit helpful. Let's go back to the tubes. Can we do this live more often? Hey man, I've been trying to do a little bit better about it. So hopefully you're enjoying the last 3, I guess, episodes, because I've been trying to do it a little bit. So yeah, $1 million a year would be a big old account. So financial advisor, before I get back to Terabad Weasel, $1 million a year would be a big account. I agree. It really all depends on what your dividend investing rate would be. So $1 million a year at 4% would be, what is that? I'm not good at math. $25 million. Let's double check real quick. So 1 million divided by 0.04 be $25 million. So yeah, it's a big old account, but I've made more progress than I guess I think. And I think what everyone doesn't recognize is that at the moment the dividend portfolio is only about 60% of the total portfolio. So I could easily increase my income by about 40% if I were to, say, move my 401k into my individual retirement account. Of course, I'd lose some to taxes and stuff like that, but I'm only reporting a portion of the portfolio. Not everything is included, so I could easily get a bump of 30 to 40% if I were to do that. So keep that in mind. So I'm a little bit further along than a $1 billion portfolio is your guess. I'm trying to think. I will do the math really quick, but it's not $1 billion, but at the moment it's not $1 billion. I'll say that. It's less than that. But if you just bought it, Bretsky, thank you. Somebody just bought it, a little bit ago. I heard the cha-ching on my phone, so I appreciate that. Bought spreadsheet. Can you email the link? If you bought it, then then you should have been able to download it. It has a download link once you purchase the spreadsheet. So Terabad Weasel. Don't want to get too much into what my degree was and my industry experience and what exactly I do, but I'm an engineer and did work in Houston before. Now I live in Trinidad and Tobago for work, and that's basically all I'll really say. I have mentioned that I do somewhat deal with investing within my day-to-day job as well, but it's not through like bonds and stocks and stuff like that. It's more about projects and executing those. So hopefully that's helpful. But yeah, I'm not going to disclose too much about my job. I don't know if my employer would be too happy about that. Bought it off the phone. Well, it should have sent you an email as well to your email address if you purchase it on your phone. Can I even send it? If you DM me on my Instagram at KNOWVIS Novus, and give me your email address, I'll send you a personal spreadsheet for you. So I think I remember you talking to me about this. And I think I checked on Spotify, and I remember somebody didn't put their email address. So yeah, just message me on Instagram. We can do that. So more questions. Otherwise, I'm gonna shut this down. That's not a threat. I just don't want to keep this going and elongate it. If you guys aren't trying to hear more things, I don't want to keep boring people, I guess. But trying to think if there's anything else or any other questions that I missed. Scroll up. Yeah, hidden unknown. Thanks. Apologies. I remember. Sure. So Instagram. I keep spelling it. I could easily just put it in the chat because I'm an idiot. So apologies. Sometimes I'm still new to this live stream thing, so still not 100% perfect. So I appreciate your guys' patience with that. But how do you recommend for someone starting? I think, I went over that relatively recently. So I think if you're trying to get started in investing, you need to think about what your time horizon is. You need to think about what you're doing with the money, what your risk tolerance is, how passive or actively you want to be managing the money. And is that it? I think that would help formulate your strategy, because dividend investing might not be for you. I'm not going to try to force feed dividend investing down your throat. This is my life. This is what works for me. It works for PPC Ian, but it doesn't necessarily work for everybody, because other people's requirements or goals might be different than mine. So which dividend stock has been my favorite? At the moment, I would say what's been the best to me is BHP. I'll show you guys. So I bought a bunch of BHP. Whoops, let me switch it over here. So I bought a bunch of BHP over the course of 2015 or so. And where is it here? It's in my IRA. So you can see BHP here. Current yield is about 7% or so. They just raised the dividend a little bit. So on an annualized basis, it's probably a little bit crazy. You can see my yield on cost is about 17%. So purchased it for about $21, $22. So the actual cost basis in my IRA is like $16 or so dollars, but I generally only care about what I purchased it at. I don't ever really include repurchasing shares or what have you in my cost basis, just because I'm lazy. You can see the return now; it's about 143%. Bought about 100 shares, 107 shares or so, out of which I now have 135 just from dividend reinvestment. So it's been rather good to me. One thing I'd like to note about it is, I just thought of something really brilliant. Might take a little bit of time though. Anyway, sorry, I'm thinking. That'd be badass. Okay. I want to write that down. Sorry about that. I used to own about 200 shares of BHP, And then I was afraid because I was continuing to buy, that at one point, I believe the set of shares that I did have broke even. And so I sold some of those and purchased something else. But I wish at this point that I had saved those because then I would have probably about $5,000 invested, but a $12,000 portfolio value and staying a relatively lower yield on cost, but the same dividend yield at the moment. So currently I'm getting paid about $400 or so dollars. This probably would have been $750 to $800. But it is what it is. You learn from your mistakes and what have you. So that's the best investment that I've made relatively recently. I have made other investments like Petrobras, where I doubled my money really quickly. But it is what it is. I'm not following on. You want the doc investment portfolio? If you just message me on Instagram, we can figure it out. Our newer platforms like M1 with fee-free and fractional shares sketchy compared to staples like Vanguard, Fidelity. Hey man, I don't necessarily know. Thanks, man. Didn't know you did that. I'll have to watch that. Oh, sure. Yeah, I mean, if you want a dividend investment portfolio, just make sure that it matches your strategy. So, oh shit, I didn't know you made. Sorry, cursing. I'll have to watch that, man. Let me. Yeah, I keep forgetting to watch your channel, so I'll have to. Let me see. That's awesome. That's cool. I'm gonna subscribe. Man, you're up to 700 subscribers. That's awesome, man. That's crazy. All right, I just opened it up. Biggest YouTube portfolios and a run through of their holdings. Yeah, shit. I'm gonna have the police on me soon enough. Just kidding around. But going back to Terabad Weasel's question, I don't necessarily think M1 Finance is wrong or anything like that. I'm not saying that it's a bad thing to use. I don't have experience on it. So I have an M1 Finance account, but I haven't filled it with anything. I've thought about in the recent couple months putting money in, and maybe I will do that because it seems like a lot of people are really interested in M1 Finance portfolios. There's a couple people that I've watched where they have like a $8,000 portfolio and they get like 70,000 views, and here I am with a slightly larger portfolio than that, and I struggle to get 1,000 views per video, but it is what it is. I'm not upset. They have a lot better of a setup in terms of cameras and microphones, and I get lazy sometimes. So, and by lazy sometimes I mean a lot of times. So I end up, sacrificing in that respect. But anyway, Gen X dividend investor. That's pretty sweet. I really appreciate you making that video. But yeah, does anybody else have any other questions? I would like to answer any crazy questions you guys have, and I know that some of you guys were waiting, and I know that some of you guys weren't able to get on a couple of the other live streams. So hopefully this one on Sunday night, a little bit later in time, was better for you than say during the week. But appreciate you guys stopping by for now. And if you haven't already, please subscribe. I know most of you in the live chat that have been chatting, but I'm sure that some of you are new to the channel, and some of you guys are being quiet just watching. So oh, you didn't make the video? Oh, I'm unsubscribing. No, investing education is good. What can stock company do that will spook you? Oh, Mohammed, thanks, man. I appreciate that. I'm not here to really motivate everybody. I'm here to help. Well, I guess I am here to help motivate people, but I'm more so here to help everybody start thinking and trying to make things good on their own life, and really think about their own financial future. the reason why you're here is probably because you're thinking about it and you want to know if you're doing the right thing. I personally don't know what the right thing is for you, but I think as long as you can ask yourself a couple questions, maybe you can get a better idea. And it could very well be that day trading is for you, and you have a lot of time to spend to do that, and you want to be really active, and you really want to take charge of that. And day trading could be for you, but it's just not for me. So hopefully you're able to ask yourself those 4 questions about time horizon, how active you want to be, when you need the money, and you can kind of come up with a investing strategy that works for you. So I do take advantage of market trends when I see it because I'm always buying, and I generally always have a little bit of cash on hand. It's never massive sums of money, but it's always 1 or 2% or a couple percent of the portfolio that's in like an emergency account for in case of emergencies, I get laid off, what have you. I have a little bit of money, and generally I reserve my purchases to the beginning or the end of the month, just because that's when I know I have more or less money. Because my expenses are generally on the first of the month, and I get paid also in the middle of the month as well. So I get paid twice a month, and that's generally when most of my expenses or transfers to and from credit or what have you end up coming through. So hopefully that helps. What can a company or stock do that will spook me? I think it really depends, man. I mean, there's a lot. I'm not fearful of M&A, mergers and acquisitions, or anything like that. But I do, whenever a company does merge, I try to read the report and figure out why they're doing it. A lot of times they do it for synergies, but is that the right reason? I don't know. But things that spook me are being overly concerned about shareholder value. I used to be extremely for specifically shareholder value. But then I realized, and this is listening to some other entrepreneurs and CEOs and stuff like that, but I think if you focus strictly on shareholder value, you may be worrying too much about efficiency in your organization. And efficiency is great. I mean, you can make a lot of money off of efficiency and what have you, but if you're too focused on efficiency, you're not necessarily being innovative. And unfortunately, with the way our businesses work these days, they're moving faster, they're changing very drastically. Being an innovative corporation is vital for survival. So you think about it, IBM used to be the creme de la creme for IT, and they focus extremely heavily on shareholder value, and it didn't bankrupt their business, but they lost market share. Microsoft was so concerned about software that they knew that Apple was creating an iPhone, and they didn't do anything about it. They did the same with MP3 players, and they were behind. And not to say that Microsoft is doing horribly, they're obviously doing well, but they lacked and lagged behind. And the only reason why they got back in the game is because Satya Nadella, hopefully I didn't mess that name up, but he was adamant about getting in on the cloud in 2013, 2014, and he changed the way that the business is run. And personally, being an engineer in the company that I utilizes Windows products, and going from like Office 2013 to Office 365 has been like a complete game changer in the business world. But anyway, different story for a different day. But I think companies focusing too much on shareholder value, I think they get lost and might lose sense of what the purpose is of what they're doing. And I understand that being a dividend investor and saying that not 100% caring about shareholder value seems a little bit contradictory. I'm not good with English, but I think what is important is looking at things that show a purpose and making sure that what you're doing on a day-to-day basis is for the purpose of the organization. And if you're meeting the purpose of the organization, that's going to trickle down. Your customers are going to feel it. Your brand is going to feel it. And then that will then lead into shareholder value. So strictly focusing on shareholder value means you might cut R&D. You might cut certain things. And in some cases, I'm not saying cutting R&D isn't a good idea. I'm just thinking that in some time, they might cut vital parts of the organization to make an extra 5% this year or 10% this year. But that extra 5 to 10% could really be the cash engines of the future for the organization. And I think that companies like Apple, Google, Amazon, all demonstrate that sort of mentality. For a long time, I was not interested in investing in Amazon because I didn't understand at that point why they were losing money and why anyone would invest in a losing share business, or not a losing share, a losing money business. Now I understand why, and it's because of the purpose that they have, and now that they're extremely profitable and they've gained market share, it makes more sense to me. But before, when I was being extremely, I don't want to say naive, but too shareholder focused, I was just like always concentrating on the numbers, and the numbers are great, but the numbers should be a result of the company demonstrating and fulfilling the passion and what they're doing to serve their customers. So whether that's Uber, making sure they have great international travel and making sure their customers are happy, whether that's like BHP, making sure that their customers get their natural resources that they need to continue to build iron, copper piping, what have you, for their customers so they can continue to serve the world, whether it's construction companies, what have you. I can go on and on, but that's that. So see a spooky stock, look at SCOR. Company shouldn't do. Okay. What's the biggest portfolio you've seen shared on YouTube? I think I have the largest dividend one. Project Mastery, what's his name? Project Life Mastery or Project Mastery Life. At one point, he shared his, and he had like $1 million, and then he shared it a year later, he had like $3 million. So that guy, he's like a consultant. I think he lives in Toronto, but he was doing a really good job. You're at the park. Dude, you're just hanging out on your phone. That's awesome. Matt Money goes to the park. That's awesome. So I'm not the largest. I think at the moment I match up with Jeremy from Financial Education. His portfolio is around the same size as mine. He makes a lot more money. He does a lot more active trading though, which is fine. It works for him. So I'm not downplaying that at all. At all. But I believe Project Life Mastery was the biggest. And I'll watch that video, that Investing Education, is that what it was? Yeah, Investing Education did, and curious what people have. But most of the time what I see is people really trying to inspire others with $30,000, $40,000 portfolios, and there's nothing wrong with that. It's nothing to scoff at. I mean, the fact that they started is the biggest inspiration of all. And I think what a lot of people do is they get afraid. And I was talking to a friend about this yesterday, coworker and friend, and she was like, I need to get better about it. I don't know what I'm doing, so I'm afraid. And I'm just like, look, I told her the same thing I tell you guys all the time. I'm like, think about what you want to do. Maybe it is you want to do active investing. Maybe you do want to only invest in ETFs. There's nothing wrong with investing in ETFs. I think it just needs to match your strategy. So, and the strategy might not be right for you. I originally thought I was going to be like a penny stock millionaire. You know what I mean? Like I was like looking at Tim Sykes and being like, that guy's my hero. I'm going to be him. And I realized very early on, I was just like, that's not for me. I don't have the time to day trade like that and what have you. So Oh man. Yeah, financial investor. I'm not going to touch that one, but Jeremy, I think, is doing a great business. I think he's very passionate. He shows a lot. He's intelligent, and I think he's doing well for himself. I personally wouldn't buy the $100 a month, but I've also been curious as to what he says in there that he doesn't say on his YouTube channel. So I'm happy for him. There's obviously people that trust him. I trust him as well. I think I think he's doing well for himself. Not trying to downplay that, but yeah, I've also thought about doing something like that, but I don't think people would buy a class from me for $100 a month. I can barely get people to buy a spreadsheet for $1. So what do I think about 3M? Would I buy shares if I was starting over? I would buy shares. The fact that it's in the 150s, I'm going to check my cost basis as we sit here, but the fact that it's in the 150s makes me start to salivate here because it's a sector that I need to get more money into. It's a safer dividend. I don't remember if it's a champion or a king or achiever. I don't know if it's been raising it for 50 years, 25 years, but it's a good company, and I'm interested in purchasing more of it. I only have 31 shares at the moment. I'd like to get that higher. I personally would love to have 100 shares, but that's a big chunk of cash. But yeah, I have a cost basis at the moment in 3M of about $162 or so. So about $5,000 worth. I'd like to get that up to around 100 shares, so about $15,000 worth. In fact, I'd like to get all my companies up to 100 shares, but sometimes it's a little bit difficult. But so what else you guys got? I'm an open book for most things. I'm gonna drink my non-sponsored A&W root beer. I should blur that out. Oh, 3M's a king. All right, cool. Does that mean 50 years? Yeah. I'm all about it, man. I love 3M. I mean, I think they've had a really good run. I think my fear though is I don't necessarily know what's in their pipeline of additional products that they're trying to unleash. But I mean, obviously, Post-it notes are huge. Everything that I work with in the office is hugely 3M. So, any other questions? I might cut this off and grab something quick to eat and get ready for tomorrow. I think there's a couple things that I need to look at on my work computer before I head out. But if anybody else has any quick questions, don't forget to subscribe as well if you haven't already. Appreciate you all stopping by. But I'll probably answer one or two more questions and then call it a night. 60 years. Okay, awesome. While you guys are chatting or trying to come up with a question, I'm going to look at my Fundrise really quick. So yeah, for Fundrise, I've been adding about 160 or 130 bucks a month. So I'm starting to add that just to get a little bit more diversification into the portfolio. It's up to about $1,500 a year now, sorry, $1,500 in total, not $1,500 a year, but I think that's good enough for like close to 60 bucks. Let's check. Yeah, it's about 65 bucks a year in terms of dividends. So up to about $1,435. Investment plan, supplemental income plus. So I'll share that with you guys here. Share that. So it's pretty cool. So you can see relatively slow, whether it's just like the net asset value growing or what have you, dividends being reinvested, and then boom, a couple months ago started adding about 140 bucks a month. So interesting, cool, a little bit different. Diversify a little bit. So what else do you guys got here? Thanks for the time. Yeah, no problem, guys. So everyone's calling it. I think I'm going to call it as well. Appreciate you guys stopping by. And if you guys have any other questions, let me know in the comment section down below. Average watch time is like 6 minutes, 43 seconds. That's phenomenal. I appreciate you guys stopping by. It means a lot to me. Any other questions, let me know. Don't forget to follow me on Facebook, Instagram, at Novus or anything like that. Do I have live stream every Sunday? I don't at the moment, but if it's something that people like, make sure to thumbs up the video, and I'll take that as a yes, I should do this every Sunday night. But it might be worthwhile. It seemed like a lot more people came on than this one. I think I was averaging like 10, 11 before on the other live streams. This one got up to like 22 at some point. So if you guys are interested, I'm down. But always like, subscribe, and leave any comments down below about anything that you want to hear. And trying to think. Try this one a little bit different. I know the other ones were kind of like Q&A, random, answering people's questions. But let me know if you like this style a little bit more. It was more like I had a video idea in the beginning, and then I kind of just went off on a tangent for about 40 minutes answering questions. So otherwise, I'll catch you guys on another video. Sorry I haven't, for those of you that don't like live stream, sorry I haven't made like a formal video, but hopefully you enjoy the live stream. So it seems like a lot of people do. Anyway, I will see you guys in the next video, and have a great evening.